Hey friends, today we're diving into a hot topic that's got the investing world buzzing, UMS Integration's recent upgrade to a buy rating. Now, most people think that analyst upgrades are just boring financial jargon, but hold on to your hats because this one's got some serious implications for your portfolio. I've got the inside scoop on why this upgrade matters and how it could be a game changer for tech investors. As someone who's been tracking UMS Integration for years, I can tell you that this isn't just another run-of-the-mill stock recommendation. We're talking about a company that's positioning itself at the forefront of the semiconductor industry's recovery, and I'm going to break down exactly what that means for you and your investments. Hey friends, welcome back to the channel. I'm Iggy, and I've been covering topics like stocks, finance, CPF, and everything related to growing your wealth. The Investing Iguana is ranked 8th in the 2024 Influential Tigers by Tiger Brokers with over 768,000 reads and 53,000 likes. I've produced over 700 videos with more than 300,000 watch hours as of December 2024. I also focus on regional and world economy topics. So let's jump right into the meat of this UMS integration story. We've got a lot to unpack, and I promise you, by the end of this video, you'll have a clear picture of why this company is suddenly on every analyst's radar. First up, let's talk about the context of these analyst upgrades. Now, I know what you're thinking. Iggy, why should I care about what some suits in a boardroom think? Well, here's the kicker. These upgrades aren't just coming from one place. We've got heavy hitters like DBS Group Research, Maybank Securities, and UOB Kay Hian all jumping on board. When multiple big players start singing the same tune, it's time to sit up and take notice. But why the sudden change of heart? It all boils down to three key factors. First, UMS has landed a major new customer contract. We're talking about a deal that could pump an extra $50 million into their revenue by 2025. That's not chump change, folks. Second, they've managed to stabilize their margins after a rough patch. And third, they're sitting pretty with a strong cash flow and balance sheet. It's like they've hit the trifecta of good news. Now, let's zoom out for a second and look at the bigger picture. The semiconductor industry has been through the ringer lately. We're talking about a sector that's been hit with everything from weak demand to geopolitical drama. But here's where it gets interesting. Semi's World Fab Forecast is predicting a 6% increase in global semiconductor capacity this year, ramping up to 7% in 2025. And guess who's perfectly positioned to ride this wave? You got it, UMS Integration. But here's where I want you to pay close attention. UMS isn't just sitting back and waiting for the tide to lift all boats. They're making strategic moves that could set them apart from the pack. Remember that new customer I mentioned? Well, it turns out they're likely a semiconductor equipment manufacturer that's expanding in Southeast Asia. Why does this matter? It's all about diversification and tapping into new growth avenues. Think about it this way. Imagine you've been relying on one big client for most of your income. It's great when things are good, but it's also risky, right? That's been UMS's situation with Applied Materials, which has been their bread and butter for years. But with this new customer, they're not just adding another income stream. They're potentially doubling their revenue from this source by 2025. Now, I can almost hear some of you asking, but Iggy, what about the risks? And you're right to ask. No investment is without risk, and UMS is no exception. They're still heavily dependent on Applied Materials, and any hiccups there could cause some turbulence. Plus, they're expanding into new facilities, which always comes with execution risks. And let's not forget the semiconductor market itself. It's about as predictable as a cat on a hot tin roof. But here's where it gets really interesting. UMS isn't just doubling down on semiconductors. They're branching out into aerospace and even dipping their toes into water and chemical engineering. It's like they're building a diversification safety net right before our eyes. Speaking of safety nets, let's talk numbers for a second. Despite a challenging 2024 where their net profit took a 32% hit, UMS still managed to maintain a net cash position of $56.4 million. That's not just impressive, it's downright reassuring for investors. It means they've got the financial muscle to weather storms and seize opportunities. Now, I want to circle back to that new customer for a moment because this is where things get really juicy. This isn't just any old contract. It's a strategic partnership that could reshape UMS's future. We're talking about a customer that's not only bringing in, significant revenue, but also opening doors to supply components for next-generation fabrication tools. And get this, these tools are focused on AI and 5G applications. If you've been following my channel, you know that these are two areas I'm incredibly bullish on for the long term. But wait, there's more. This contract isn't just a flash in the pan. It includes a 3+3 year renewal clause, which means UMS has visibility on this revenue stream potentially through 2028. That's the kind of long-term stability that can really change the game for a company like this. Now, I know some of you might be thinking, okay, Iggy, this all sounds great, but what's the catch? And you're right to be skeptical. It's always important to look at both sides of the coin. So let's talk about some of the challenges UMS is facing. First off, they're still dealing with the aftermath of a tough 2024. Their revenue took a 19% hit year over year, and their net profit was down 32%. That's not small potatoes. The main culprits? Weakness in their semiconductor segment and some nasty Forex losses. But here's the silver lining. Their fourth quarter showed signs of improvement, with revenue up 4% quarter on quarter and net profit rising 6%. It's not a full recovery yet, but it's definitely a step in the right direction. And let's not forget about the broader market risks. The semiconductor industry is notoriously cyclical, and any resurgence of COVID-19 or escalation in US-China trade tensions could throw a wrench in the works. Plus, UMS is expanding into new facilities, which always comes with its own set of challenges. Think labor shortages and equipment delays. But here's why I'm still excited about UMS's prospects. They're not just sitting back and hoping for the best. They're actively working to optimize their operations and diversify their business. For example, they've managed to reduce direct labor costs by 12% in the second half of 2024 through automation investments. And their aerospace components business is growing, now contributing 9% of revenue compared to just 5% in 2023. Now let's talk about what all this means for you as an investor. The analysts have set some pretty optimistic price targets. We're looking at potential upsides of 13% to 23% from current levels. But remember, these are just projections. What I find more interesting is the long-term potential here. UMS is positioning itself at the intersection of some major technological trends: semiconductors, AI, 5G, and even autonomous flight systems. They're not just riding the wave. They're trying to catch the next one before it even forms. And with their strong cash position and strategic partnerships, they've got the resources to make some big moves. But here's the million-dollar question. Is UMS a buy right now? Well, that depends on your investment strategy and risk tolerance. If you're looking for a company with exposure to the semiconductor industry's recovery and potential for long-term growth in emerging tech sectors, UMS could be an interesting addition to your portfolio. Their 5.5% dividend yield is also nothing to sneeze at, especially in today's low-interest environment. However, and this is important, don't just take my word for it. Always do your own research and consider how any investment fits into your overall financial plan. Remember, diversification is key, and no single stock should make or break your portfolio. Before we wrap up, I want to leave you with a thought. The story of UMS Integration isn't just about one company's upgrade, it's a snapshot of the broader trends shaping the tech industry. The shift of manufacturing to Southeast Asia, the growing importance of AI and 5G, and the increasing integration of aerospace and semiconductor technologies. As investors, these are the kinds of trends we need to be watching. So, what do you think? Is UMS Integration on your investment radar now? Do you see similar opportunities in other companies? Drop your thoughts in the comments below. I always love hearing your perspectives. Thanks for tuning in, friends. Remember, in the world of investing, knowledge is power, but action is what builds wealth. Keep learning, keep growing, and I'll see you in the next video.